Just so you know, after the presentations, there will be a Q&A session at the end of the webinar as well. So without further ado, please allow me to introduce our first speaker, Marant, who is the senior advisor at CWCPA, and it's a professional advisory firm. So Marant is a graduate of the Monterey Institute of Technology and Higher Education, and he majored in international relations. Prior to joining CW, he worked at a large-size e-commerce company in Shenzhen, so he has this in-house experience as well. And then he joined the Latin department of CW and has recently relocated to the Shanghai office. Please welcome Marant.
Thank you, Anna, for the introduction. I just want to make sure before I start, can everyone hear correctly? Can everyone hear our voices? Can you please write it on the chat if there's no problem with the audio while I prepare my presentation? Okay. Let me see 1 second. Okay. So good afternoon, everyone. Thank you for joining. As Ana introduced me, I'm Aran Caballero from CW, the Latin department. I'm a senior advisor, and today my presentation is going to circle around some tax issues and some perspectives for 2021. First of all, I would like to start with some recent tax updates. Some of them took change starting from January of this year. There was an important revision on the import and export taxes and duties. For example, on the VAT, on the agricultural and utilities items, manufactured goods, services, there was a change on the tax rate. But of course, in order to know which items are the ones affected by this change, we will need to revise them on a case-on-case basis, depending on the category and according to the formula that corresponds to each of the category. Another change was on the consumption tax, which normally is deemed too harmful to health items such as alcohol and tobacco, luxury goods, and also high-end products such as cars. There was also a change on the customs duties. Some agreements between China and other countries came into effect. Most of the countries belong to the Asia-Pacific region and also are part of the Asia-Pacific Trade Agreement. A second update is the calendar for 2021 on the monthly tax declaration issued by the tax authorities. The months that were affected were January, which already passed the date, February, April, May, June, August, and October. These changes correspond also to the public holidays that we're going to have on these months. So some of them were too close or were crossing during the deadline on the day 15 of each month. For the other months, the date remained the same. The declaration must be done every 15 of each month. Lastly, there was an allowance on the deduction of taxes regarding advertisement and business expenses. These only qualify for certain industries, and these industries are the cosmetics, pharmaceuticals, and beverage that do not include alcohol. It's important to mention that this deduction can be carried out in the next years, but the only condition is that this expense did not surpass 30% of the sales revenues of 2020. So taking away the updates that we have up to January, I would like to go over a little bit the situation that we had on last year, just to go over some points. I think it's important to mention them. So as we know, last year was a challenging year. I think most of us will still feel the effect during 2021. Some companies, of course, during the first months, which were the harder ones, experienced a shortage of cash flow and the business went slow down in general. We were introduced to working from home from a more, with a change on the dynamic of the working in an office to working to home. And this will take effect. I think this will be really important this year, and it will take more relevance and importance in the years to come. And of course, even though things became a little more stable in China, some business did not recover so fast. Seeing this scenario, the Chinese authorities implemented some measures to alleviate the pressure on companies. Some of the measures were related to social insurance. They were given some months to avoid payment to these contributions related to their employees, while the employees still had to pay this contribution. It's important to make the difference that in Shanghai, the foreign employees do not need to pay this contribution, but it's mandatory in other cities in China. Also, if you have local or Chinese staff in your company, this is a mandatory contribution that you have to make. Other, let's say, measures that were taken by the government were related to taxes, specifically on the value-added tax. There were also extensions for monthly declarations, as we just saw in the previous slide. And for the small and medium enterprises that were experiencing bad business, also there were reductions on their tax declarations. We can say that the industries that benefit the most of these let's say, measures were related to health and medical equipment manufacturing, but of course, this was to respond to the urgency in the country due to the pandemics. Still, with the measures, there were some challenges that the companies still need to face, and to maintain the business running, a reduction on the operation cost was thought by the management. So we faced the first scenario, reduce expenses. With less expenses, of course, they came in a variety of ways, such as the salary reduction of the employees, the relocation of the company, change of the place where they were renting, probably to a lower rent, giving to the employees an unpaid leave, or also cut down on other expenses such as marketing. In the short term, this gives the companies some in their cash flow, and it allowed them to surpass the difficult months. But in other cases, termination was not, it was not possible to avoid termination of some employees. Of course, this was related to companies with a big number of employees. In the long term, of course, it will reduce the expenses of a company, but it will also reduce the capacity of operations. And in the short term, it will mean that the cash flow will be also affected because they will need to pay the expenses on the severance for the employees to terminate. We're going to see the first case. The first case is in salary reduction. This is one of the experiences that one of our clients had during the first months of last year. A little bit of context for you is a trading foreign invested enterprise based in Shenzhen with only one employee, a foreign employee located in Shenzhen, which managed the operations for the headquarters in Peru. So from the perspective of the headquarters back in Peru, things were not going to be great in China for 2020. So there was some policies issued by the headquarters reducing the salary of the employees on the subsidiaries, not only China, but all over the world. Of course, at the beginning, the manager didn't like this proposal. Let's be honest, no one likes to get their salary reduced. But the situation was, let's say, out of the normal. At the end, a compromise was reached between the headquarters and the employee, and the 30% reduction of the salary was imposed as a temporary measure. Some steps and consideration in the process were making an amendment to the employment contract, and I think Anna will be giving more details into this topic related to employment contracts later on. And also, we provided a calculation of the individual income tax on the employee, just to give her a little bit of peace of mind on how this temporary reduction will adjust or impact her tax declaration for 2020. It's important to mention that the individual income tax is calculated now on an accumulative basis. So at the end of the year, the tax amount that you have to pay, it's more compared to the first months. Some of the facts that came out of this negotiation, well, when that the company saved money in the first months, and actually this measure allowed the employee to have some leverage with the headquarters. after the first, let's say the first months that the salary reduction started, things were not great in Latin America. So actually the operation took a shift to China and everything was refocused to China. So at the end, the employee did not really experience a big reduction on the salary. It was a temporary measure only for 2 months, 3 months maximum, and their individual income taxes were not affected at all. Now let's talk about a termination case, which was a little bit more complex, and since the company involved a bigger number of employees and bigger operations. This was a company producing illumination equipment for entertainment. As you know, the entertainment industry was one of the most hard industries due to the pandemic. People could not gather around and people could not travel. So this translated into problems for this company. So some of the options that the management explored were reducing the salaries of their employees. They didn't want to, at the beginning, they didn't want to fire anyone, but as the situation got worse, they had to review again this possibility. So they were faced with working with local agents, factory workers, and also the engineers that were a foreigner for a salary reduction. But at the end, the negotiation could not reach an agreement. So they decided to move into the termination part. So the steps for this, of course, was again to revise the contracts and the agreements and prepare some calculation on the compensation and severance. I have to make some important remarks on this. The relationship or the agreements between locals and employees may be perceived as different, but let's see what was the outcome of this situation. So actually the agent was paid directly by the headquarters. So the foreign invested company based in Shenzhen, this is also case from Shenzhen, was thinking that they didn't have a working relation with the agent, but the agent seek a second advice on the labor bureau authorities. And the conclusion was that this could brought problems to the company, legal problems related to the working relation that could be deemed between the two parts, a foreign invested company based in Shenzhen and the agent. But of course, here, there comes another point. The agent was working under this situation because he didn't want to pay his taxes and social contributions. And that's why he worked for some time in this arrangement being paid from outside of China. So seeing the fact that the agent didn't want to pay his taxes, the management had to sit down with him and negotiate again for a bigger compensation. So this case didn't escalate further and didn't involve the company, the labor authorities. So this is a situation that may need to be watched out more carefully. For the employee, it was a little bit more straightforward. As I mentioned at the beginning, there were some allowances by the government to not pay some months of social insurance. And well, at the end, the employee was happy with the severance, the calculation severance provided, and he went to get his her social insurance fund. But they found out when they checked out with the authorities that since the company didn't pay the last months, the social insurance was not able to be released. So this is another important point. Always make the declarations of your employees and pay the corresponding social insurance if it applies. For foreigners here in Shanghai, they're not mandatory. It's not mandatory for them to pay, but for the local employees, it's something mandatory and something that needs to be watched with carefulness. So just to finish this case, the considerations, it's always important when the termination is faced that to have things end friendly in a friendly manner, and always try to maintain everything legal, especially the working relationships. Some cases like this may be happening between agents and companies, but the employees here in China have a high degree of protection, so it's important to look up on that. And also don't forget to pay the social insurance and taxes of your employees. It's really important. About to finish, let me give you some final thoughts. Well, for 2021, I think we're just starting or this year and finishing January. I think some countries will still struggle to resume fully their operations, and China economy will take a bigger role in the world scenario. The vaccine, of course, is being deployed, but we will have to see probably at the end of the first half of 2020 how it really regulates or change the current traveling restrictions. Regarding some advices, I think what we experienced last year will trigger more and more the use of technology just to avoid the person-to-person contact. And this will be also translated in some changes taken this year. For example, currently in some cities, there is a scheme pilot for the special BAT FAPIAO. This will become electronically. So I think this is one of the cases that we can see in the short term for this year. This will spread out to China, and now the FAPIAO that before needed people to come to the tax authorities to make the request will be available online. This will facilitate the operations of companies as well. Last year we saw some of the policies that the government applied, and I think this year we'll also see some other benefits or incentives for the company and the economy to keep going. This is a good advice that we always give to our clients. The changes, it's always important to keep updated on the changes in China, especially since they occur really fast, and always try to seek the advice of an expert. Just to finish with my presentation, I would like to talk about a little bit of my company. CW has more than 30 years of experience. It's a professional consulting firm funded by Mr. Wong, and we offer a variety of professional services tailored for your business. The Latin department celebrated its 15-year anniversary last year, and our team is conformed by professionals with diverse cultural background experience in accounting, consulting, and advisory. Just to finish, some of the services we offer are related to accounting, audit, corporate secretarial services, HR process outsourcing, tax advisory, China consulting, both in mainland China and in Hong Kong. And with this, I would like to thank you for your attention, and I would like to give the word back to Anna.
All right, thank you, Moran. Thank you so much. I think everyone will have more questions during the Q&A section at the end. But it was really interesting.
Regarding the questions, we will happily answer after Anna's presentation. We will have the Q&A session. So with this, I would like to introduce Anna, give her the word. I think now you can share the screen. Just 1 second.
Sure.
While Anna prepares her presentation, I would like to introduce her. Anna is in charge of the Business Development and Marketing Director at A&Z. A&Z is a law firm with offices in five offices, including Shanghai, where Anna is located. She's an Oxford University graduate with a multicultural background. She has been for five years in China, and she's passionate about helping companies to thrive in China through business-oriented legal solutions. So with this, I would like to welcome Anna to start her presentation.
Thank you so much. And it's my pleasure to be here today, of course. So I will be speaking about doing business in China, and more specifically about some of the legal issues to consider. So I will be definitely expanding on some of the things that Morant mentioned as well. So as Morant introduced me, I think I don't have much to add, but A&Z is effectively a full service firm with over 50 experts. And we have 5 offices indeed around China and in Japan as well. Maybe something I can add is that we are a member of several international law firm networks, and we have both foreign and Chinese partners. So that's my WeChat right here. If you want to scan the WeChat QR code, or just email me anytime, screenshot this page, and of course, you'll get more information at the end as well. Right, so let's get to it. The subject matter. There are 3 topics I'd like to discuss with you today. And Firstly, some very brief updates about where we stand in China in the big picture. Then we will look in much more length into the essential labor issues that businesses are facing in 2021. And then some of the key points regarding international transactions and fraud, most specifically in 2021. So where does China stand right now? We live in a globalized world, and the overall context is more important than ever this year. Sources indicate that due to COVID-19, the global GDP decline was at 6.2% in the world. And China is the only major economy to grow, though at a slower annual pace, of course. But the projections for next year are very optimistic. So what does that tell us? It tells us that China has had a head start in recovery, and it's very encouraging for the businesses operating here. Nevertheless, the reality that we see is that COVID has made large number of companies face business difficulties and even a survival crisis for some of them. Although some companies have weathered this economic downturn, they've also realized that the impact is so important that it might be long lasting, and they need to preserve their financial strength to improve their ability to resist risks. So in the light of this, let's discuss labor laws for businesses. So in order to reduce the overall costs, companies may reduce labor costs. But therefore, they're also confronted with issues like employee salary reduction, adjustments, working hours, and other changes. So many companies also directly downsize, which means that they need to terminate the labor contracts. So the question is, what should companies do when they want to adjust the wages, the way of working, such as remote working, which we've done a lot, all of us, I think, in the past year, and might do more very soon again, or the working hours. Right, so as wages, working hours, and workplace are all terms that a labor contract should contain. If, for example, a company wants to reduce labor costs by reducing wages, basically, essentially, it's a change of the labor contract from our legal perspective, of course. So let's look at our first case study of an individual labor contract. So Company A and Ms. Lee signed a contract in January 2019 in which they agreed on a monthly salary of 9,000 yuan. In February 2020, Company A issued an additional agreement for collective salary reduction of all employees, which agreed that the collective salary would be reduced by 50% during these 2 months of 2020 in February and March. However, Ms. Lee did not sign the aforesaid agreement. So, in other words, when the salary in February and March was paid, Ms. Lee's salary was also reduced, but because she didn't sign it, the agreement, she sued Company A at the court and required Company A to pay back the deducted wages. So because she didn't sign the agreement, it could be considered that Ms. Lee and Company A had agreed to change the wage standard. So Company A still had to pay her the standard sum of money. Right, so just to go into more detail on that, according to the PRC's labor contract law, the contents of a labor contract can only be changed upon negotiation, for sure, but also a consensus between an employer and a worker. So in addition, it has to be made in writing, which is the big takeaway of this point. So for example, in the above case, the company and the employer didn't reach an agreement and also didn't get the agreement in writing, and so they cannot unilaterally reduce the salary. Right, so I would like to also share the notice on properly handling labor relation issues, which relates to COVID-19 specifically. And it was issued by the Ministry of Human Resources and Social Security, a bit of a law for you here, but I think this is very important since it came into vigor quite recently. So when an enterprise has difficulties in production and operation Due to the impact of the pandemic, it may stabilize posts by doing the following, right? So adjusting salaries, rotating posts, taking holidays, shortening working hours, and other means. But again, it has to be done through negotiating with employees, reaching the agreement, and then in that way, reducing the layoffs to the greatest extent. So this is very helpful, I think, for businesses to know, very useful in this context. So where a company suspends production or business for a period less than a wage payment cycle, it has to still pay wage to its employees following the standards of the contract. So again, we're talking about contracts here. And where the suspension exceeds the wage payment cycle and the employee has provided the services, the wage paid by the company cannot be less than the local minimum wage standard. This standard, of course, varies depending on the location of the company. So it can depend on the city, for example. Right. So one more thing about this case study that's relevant to this case study. So according to the opinions on stabilizing employment relationship, so this is also related to COVID-19 and is very recent, issued by the Ministry of Human Resources, among others, as you can see on the left on my slide. So it's useful to know for companies that are strongly affected by COVID-19 and have difficulties in production management. So basically, these departments and associations listed on the left side encourage the companies to negotiate with their employees through democratic procedures to stabilize work posts by notably adjusting salaries, rotation of posts again, shortening working hours, as you could imagine. Basically, these departments and associations can guide the companies to negotiate with trade unions and employee representatives to delay the payment. This is done in order to help the companies reduce the pressure of capital turnover. Therefore, our law firm suggests that it's necessary to negotiate with the employees and seek the support of these departments and associations whenever necessary. Don't worry, I will share this information with you after the presentation as well, as I know it can be a little bit much when you're just looking at it like this. Right, so let's have a look at our second case study regarding labor rules and the system. So affected by COVID-19, many companies need to timely adjust their internal management system, right? But they also encounter challenges in this process, legal challenges. So let's take a look at the legal risks specifically contained through this case. So Ms. Chen joined company B in August 2018, and she read and signed the labor contract. This labor contract stipulated, the first article was stipulating that she must abide by the company's rules, which include the rule of performance assessment. But Ms. Chen said that she had not seen the rule of performance assessment and did not agree that company B later calculated her business commission according to the rule of performance assessment. So after this, Ms. Chen applied to the Labor Dispute Arbitration Commission, requesting Company B to pay the commission from April 2019 to June 2020, when the company was calculating her business commission according to this rule. Company B, however, claimed to calculate the commission according to the rule of performance assessment, but failed to submit the evidence to prove that this rule had gone through the democratic process, which I'll explain right after, and announced or informed to Ms. Chen. Hence, Ms. Chen's request was supported by the court, by the Labor Dispute Arbitration Commission. So let's look at this a little bit more. So the democratic process is actually very important to understand. So according to PRC's labor contract law, which I'm talking a lot about today, but it's the foundation of all labor-related discussions we're having. When an employer formulates, revises, or decides on rules on major matters, so there's a long list of these major matters, but basically they all involve vital interests of employees and workers. these matters must be discussed by the Employee Representatives Congress or all staff, who then make a proposal and give their opinion, and then the employer must carry out equal negotiation with the labor union or employee representatives before making a decision and announcing it, of course. So employers must announce decisions on rules and major matters like this, which directly involve these vital interests of employees. So again, looking at our case that we just looked at, so Ms. Chen, Company B did not submit evidence to prove that the assessment system had been formulated through this democratic process. And the submitted labor contract with signature on its own is not enough to prove that this rule had been announced or notified to Ms. Chen. So it cannot support the request of the employer in court. So therefore, from a practical perspective, when the company wants to revise the rules, such as labor remuneration, maybe working hours, labor discipline, it should follow some steps. So let me look into that with you today. Step 1, the rules of major matters must be formulated by the department with the corresponding management functions. And the content should not violate provisions or laws or regulations. I mean, it seems obvious, but in practice, it really needs to be reminded. Step 2, so then it must be handed over to the Employee Representatives Congress or all staff to organize discussion and seek for opinions, so seek for feedback, right? Step 3, the corresponding department must revise the draft according to their opinion and negotiate with the labor union or employee representatives. But step 3 is the point where I'd like to really say that in practice, as long as such a consultation or negotiation process is completed, it can be regarded as a democratic process that is completed, right? So in this step, as long as it's implemented from a business perspective, it's done. And step 4, the company must announce decisions on rules and major matters and notify the workers. So for example, this can be done by issuing employee handbooks or conducting an internal training. It's important to keep the original documents throughout the democratic process. This you really must keep in mind. So drafts of rules, opinions of drafts, final decisions, etc., as well as documents such as emails to notify employees and confirmations from employees. So this is the vital substantiating evidence that you will need in case there's a problem. And quickly, something that we've been asked about quite a lot recently, and that's still going to be important, I think, in 2021. Can a company rescind, or in other words, cancel the labor contract on the grounds of some serious difficulties that are caused by COVID-19? So according to PRC's contract law, if the labor contract can no longer be performed and upon negotiation between the employer and the worker, both parties are enabled to reach an agreement. The employer may rescind the labor contract by giving the employee a written notice of 30 days or making an additional payment of 1 month's wage to the employee. Right, so if the company wants to rescind the labor contract for these reasons, of course, they must provide evidence to do that, right? So let's look at the evidence. There's, for example, the significant changes on the objective circumstances. So it must be proved that companies' revenue and profit have indeed decreased significantly and must provide the decision on cutting departments or posts. So the evidence could be the resolution of the board or the shareholders meeting. If both sides fail to reach an agreement, then the relevant negotiation records should be provided to prove that there has been a process of unsuccessful negotiation. Right, so in conclusion, labor contracts and labor laws directly affect the interests of the company and the employees, and especially in critical times like now. Therefore, we would say it's essential to examine the legitimacy and feasibility before carrying out any actions. In other words, really make sure that what you're doing is going to work out and not work against you. We encourage you to seek counsel, of course, for the review of employment compliance and timely responsive case of disputes. Make sure that what you're doing is right, but of course, as soon as you feel that you're in a situation that you cannot handle, it's best to seek counsel. Now, to a different topic that is especially relevant in 2021. So, in the past year, we have encountered many cases of international trade fraud. Perhaps it could be because of the impact of COVID-19 that more international companies are only exchanging information by email, and this is really helping fraud organizations. If international travel cannot go to normal, we definitely want to keep this in mind, and I hope that these examples might be sobering for some and perhaps prevent some fraud instances. So in our case studies, we'll focus on overseas enterprises remittance to Chinese enterprises. So first, let's refer to a case of Alpha Company established in Spain. The basic facts are such: Alpha Company has a constant business partnership with Beta Company established in China. Beta Company would supply goods in accordance with the sales contract between Alpha Company and Beta Company in exchange of Alpha Company's payments for the goods. So from April to September 2020, Alpha Company received emails stating that Beta Company bank account in a multinational bank used for receiving payments had changed. In other words, that Alpha Company is required to transfer the money to Beta Company's newly designated account, so a different account. Then Alpha Company received such emails 3 times in the period from April to September, and each time when they received the email, they made the payment through remittance into the designated account that they were given through these emails. Then in October 2020, when Alpha Company was asked for the outstanding payments by Beta Company, they confirmed that they never sent these emails regarding the change. So they confirmed that they never did it. Hence, Alpha Company encountered some significant losses from being frauded. Right, so this scenario happens very, very frequently. So I would like to give you a different angle on this. Again, real case scenario. So Gamma Company experienced a very similar story to Alpha Company. So in a transaction with a Chinese partner in 2019, Gamma Company received an email in the name of its Chinese partner. Dear regular customer, we will ship your recently placed order once we receive the balance of $25,000 as per a long-standing arrangement. For tax reasons, because there's always an excuse, we would like to pay in a different account than the usual, right? So it seems really plausible, given that it's part of a routine. So why does this even happen? According to our understanding, this scenario can be caused by either hackers breaking into an email system and sending these emails, or when the fraud organization simulates an email address, which is really similar. For example, they will replace a 0 with an O, an N to replace M, etc. In Gamma Company's case, the money was eventually paid to another company's offshore account in China. Fortunately, that company, the company that received the money, had not yet transferred the money overseas. So after the company called the police and informed the offshore account to stop the payment, they finally got the money back. So that's a happy story. But it's not always such a happy ending. So if a company encounters the above payment problems, there are some practical solutions and steps to follow to maximize the possibility of regaining your money back. So first step, immediate action to preserve funds. You need to talk to the local bank and local police immediately when you realize that there has been a scam. Most people are in kind of a state of shock. So still try to go beyond that, or ask for help, ask for counsel, and use whatever network you have to reach to the bank and the public security department to try to freeze the funds. This is the most critical step because once the funds have been cashed out or laundered, they will become very difficult to trace. And unfortunately, we have encountered many instances like this. Step 2, recovery strategy. So once the funds have been informally frozen, because it's unlikely that you will have time to seek an assets preservation order, there are the following options that we can discuss with you here today, so that might be helpful for you. So police route. So of course it's a criminal activity. So the issue is that the police will not directly get your money back. However, they can put the case on file and the money may be frozen and returned to you after the investigation. Right. So the second is the commercial negotiation route. Unfortunately, sometimes victims cannot file a case right away. In that case, you can force the other party to return the funds through negotiation, and also take advantage of the temporary freezing of funds to see what else you can do. So in practice, we definitely suggest to do both police and commercial negotiation, because they can help each other. It's whatever helps you to freeze the funds, since step 1 was so crucial too, to look into your network and see how to freeze the funds, right? Well, of course, the best way still to prevent such incidents is to establish some effective management measures. So in case of an email that changes the payment account, double check, always double check by other reliable means. Never simply trust, and this is where I hope this can be useful to those listening to this talk. Just keep it in mind that you always need to double check. We also suggest to add a relevant clause in the contract, so whereby any party that wants to change the account must sign the corresponding supplementary agreement. So that way you will reduce the possibility of hasty payment to unfamiliar account, or maybe reduce this possibility if you never know, a person who's handling payments that day or that week in the company is not aware that she should or he should be double checking. So yeah, that's something else to keep in mind as a preventative measure. So a quick reminder of the topics that we looked at today here. In conclusion, companies working internationally should be aware of the tactics that sophisticated scammers commonly use to defraud their victims. Definitely put a clearly defined process in place for verifying the accounts and the invoices, of course. If such an event arises, you absolutely need to secure the funds and then implement the strategy aimed at the recovery, as the ones that we discussed before. And of course, it goes without saying, it's much easier when prevented or handled by professionals locally in China. So we also suggest to always get professional help. So just a quick reminder here, these are the 3 points that I brought to your attention today. So the big picture, some labor issues, and international transactions and fraud. So in the global context, China is on the path to recovery. However, it's undeniable, I think, that we're still experiencing uncertain times. In 2021, make these points part of your business plan, part of your priorities, thus identifying and mitigating the risks for your business. So prepare for long-lasting consequences of COVID-19, because nobody really knows how this will go in the long term. Examine the feasibility of modifying labor contracts, set up defined processes for verifying accounts and invoices, and of course, seek counsel for compliance and dispute resolution. Thank you very much for listening. I hope this will be helpful, or maybe allow you to facilitate your business this year in 2021. And I think now we can see if anyone has any questions for the Q&A.
Let's check some. If you have some questions, please, you feel free to start writing them on the Q&A session. We can go through them.
right, so I'm looking because we also received some questions by email prior.
Okay, we can start first with one of the questions from Elena, if you agree.
Sure. So let me see. So first of all, Marant, let me check the questions that we received. So, for example, one of the questions regarding tax: do people who stayed out of China still need to declare their taxes?
This is a little bit a complicated question, but in theory, if you still receive your income from China, this will be deemed as taxable in China. So if, let's say some people have faced the challenge of coming back, but they still have received their salary here. So this is an income that is deemed made in China, therefore is taxed in China. But on a good note on this side of the taxes, if people have not managed to return during 31 consecutive days, they still are they are allowed to be exempt for the global taxes in China. So they already have their tax break on this point on the good side of the things. Yeah. Okay, and let's see. Wait, do we have any questions? Yes, I think we have one. It's related to tax. Jim Wilson says, at what point in time does your worldwide income become taxable in China? Okay, this question is related to one of the what we were commenting. Your worldwide income becomes taxable after having 5 current years as a tax resident in China. So it means that you have stayed more than 90 days consecutively during in China for 5 years. But it's important to say that last year the government allowed a tax break. So it means that for people that were already going to become a worldwide taxpayer in China, they already, let's say, they start with a clean slate. So this is when you become a worldwide taxpayer in China. I hope this solved your question. Okay. If you, okay, just to clarify this point, you do not come from work. No, it's important to clarify this point. If you stay, it doesn't matter if you're working or not working in China. If you stay more than 90 days a year in China, you're deemed as a tax resident. Yes. So this is, if you stay 90 days for 5 years in a row, then you will be subject or deemed as a worldwide taxpayer in China. So this is a situation that needs to be taken into consideration and need to be avoided. But as last year, the government allowed a tax break on everyone. So at least we can be a little bit not so worried about this topic. I think, Anna, we can go for some of the questions that you received on your email.
Sure.
Okay, one of the questions someone asked was, what size of a company does the democratic process apply? Does it apply to a wholly foreign-owned enterprise?
Mm-hmm. Right, so basically when making the applicable labor rules, which impact, again, the interests of the employees, all companies must go through this procedure. So it could be a WUFI, it could be an SME, right? So basically it is really regardless of the size of the company. But of course, in practice, it is a little bit different depending on how big the company is. So as you mentioned in your talk, obviously, Marant, I think you said that if it's a smaller or bigger company, it's just the complexity of the situation that will vary, basically.
Thank you, Anna, for your insight on this question. Anyone else would like to raise some other question on the Q&A section?
So looking at the Q&A and on the chat, what is a worldwide taxpayer? I think somebody's asking in the chat.
I think that this is the question that was already answered.
Yeah, that was already there. if work permit expires while staff member is abroad and can't return, do existing contracts become invalid? I think it's kind of for both of us.
Anna, would you like to answer this? Maybe I can complement on your
Yeah.
part.
Yeah, I think it's still a little bit vague, but basically, if you're an basically it's not the case. So contracts are still valid regardless of whether the staff's work permit do you mean the labor contract for that person, right? So for example, a person has a labor contract, they're part of a company, and then their work permit expires and they are still abroad, still in Europe, but their labor contract is not nullified because their work permit expires. So do you want to add something to that, Morant?
I think
we're also, yeah.
Yes, I think I cover you cover most of the points of these questions. Yeah, correct. I think there will be a need for a new contract, and also from the HR perspective, the visa process will needed to be start all over again. It will be needed if of course if the person is outside of China, they will have to start the process in their Chinese embassy in their home country and provide all the legalized documents for the visa, in order to, of course, with a new employment contract.
Yeah, so just more hassle.
Correct.
Basically.
Correct.
Right. So I see in the chat, if you don't mind, please, the attendees typing in the Q&A, but I see in the chat as well that like to come back. Oh, right. So the worldwide taxpayer, right?
Yeah. So to answer what is a worldwide taxpayer, it's a status on where your tax residency, it's related to your tax residency. In this part, as I mentioned, if you stay a certain time in China for a certain amount of days, which is more than 90 days a year for 5 years in a row, on the sixth year, you will have to, you will be deemed as a worldwide taxpayer, which means that even if you're not working in China, but you are residing during this period of time, you will also be taxed on your income outside of China. So if you have, I don't know, if you have other businesses or other sources of revenue, the government of China may tax you on those as well. So that's why it's important also like to make some holidays, some light holidays, sometimes during the year in China if possible. Okay.
Right, I'm looking. Anyone, any more questions? I don't know. So let's see. Is there anything else that maybe was asked to us before? I'm looking at the tax. Maybe something about salary adjustments, how they may affect income and individual income tax. Maybe that's something else you want to mention, since it's a question that we also received for you, Morant.
Okay, I think also there's another question on the Q&A part, because people are just really coming back. We can talk about that point after answering this. Yes, there is a tax break, or let's say the government allow a clean slate for the people. So the year count was restarted in 2020. Yeah. So it's not really, let's say, dangerous or anything if 2020 didn't allow people to go out of China, but this will become more, let's say, a more delicate situation after 5 years. So I think right now, 2020, 21 or 22, I mean, there's no problem for that side. Yeah, it restarted for everyone. So just don't be so relaxed about your visa saying, oh, I have a business visa, or I'm on a tourist visa. This does not apply to me. This applies to the people depending on their state, not their migratory status. Yeah. Okay. Going back to the point that you mentioned, Anna, well, The salary adjustment, of course, it can be it can impact the salary of the employees, but it will depend, of course, on their calculations. There are some deductions to consider. There are some allowances also to consider. So let's say that for a regular employee, maybe it will only affect on the last months of the year, which the salary becomes bigger. Sorry, the tax becomes bigger. If it's happened during the first months, I don't think it will be really impactful for the whole year. But if it's a long period, it will be, at the end of the year, probably the salary will be low.
Mm-hmm.
Correct.
Right. Yeah, something else that's related a little bit to this uncertainties, I guess, is that I got asked a couple of times before the webinar was from people who were asking, well, should I join this webinar? I don't have a WUFI yet. So legally, does that impact me entering the Chinese market? Because I want to, because I don't know, I'm ready for the Chinese market and I don't know how basically things will go in the next few years. So I want to enter the Chinese market anyway. So I can answer this from legal perspective. Maybe you can say something about tax. So in terms of obstacles, so let's say you want to have a WUFI soon in China. Actually, there are no legal obstacles to that. I just want to kind of clarify that, because it's all about, you know, the fact that you can still open a company, you can still have an office, you can still get everything done remotely at first. So from a legal perspective, actually, you can do business in China in 2021, even if you're not in China. So the difficulties will be linked to travel and everything else. So maybe Morant can also expand on that, on the difficulties of entering with the WUFI now in 2021.
Yeah, as you mentioned, Anna, especially here in Shanghai, I think right now the authorities are allowing to not go through the whole process of legalization of the papers. So, of course, I think facing the current traveling restrictions, the authorities will become more flexible for the period being, of course, until if things suddenly change tomorrow, the situation will be different. But as you mentioned, there's no current obstacles to opening business or running business here in China, even though if you're not here. Yeah.
Mm-hmm. Yeah, I think it's an interesting point, because I think there were really different people joining the webinar that either have a company, are part of a company, or want to have a company. So I think this is a good point to kind of close off our Q&A today. Unless anyone has more questions.
Yeah, feel free yeah, to write either on the chat, on the Q&A. We will keep, let's give a few minutes. If not, I think we can, there are no further questions. I think we can close down presentation.
Toby Wong, thank you.
That's not a question, but thank you.
No, thank you everyone for joining us today. Thank you for your time. I really hope that Moran's great presentation and mine was useful to you today.
Thanks a lot for attending, and we will be in contact with you, with the people that attended the register. We will try to circulate our materials, and also we will make this recording of the webinar available. We will do a follow-up email regarding the webinar, and if you have any questions, feel free to contact either Anna or me through our emails. And thank you so much for attending today.